Bitcoin has closed yet another daily candle underneath the 28 to 30,000 major yearly resistance. We're going to discuss the short term and the macro today, so let's get into it. Okay guys, welcome back to the channel. Thank you for tuning into another video. I hope you're all having a fantastic day today. We're here to discuss Bitcoin on the short time frame as per the chart over here, and of course the macro time frame as per that 28 to $30,000 resistance. We in fact have just seen another daily close underneath the $28,000 resistance, and in today's video we'll be discussing the implications of that and what that potentially tells us going forward for the price action. Now, if you are interested, you can smash the like button, hit the comment button, and of course subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technicals, the structures, and all of that good stuff. We leave out emotion, we leave out bias, we leave out bullshit, we leave out hype, guys. We only talk about the probability and the statistics and the facts on this channel, nothing else, nothing less. You can also find us on Telegram, the second link down below. I highly recommend joining up. It takes 5 seconds. You'll get access to all of our charts, news events, videos, updates, analysis, information, educational posts, and so much more, guys, in this channel. It is our second link down below. If you're interested in supporting the channel, the best way you can do it is via Bitget. Sign up and trade where I trade to get 15% off your trading fees and so much more. If you're interested in trading signals, you can join our VIP channel. We'll get access to 2 channels, the VIP main channel and exclusive group chat that has a few different subgroups in there. You can find all the information here, guys, on regards to what you'll get and what it is. And of course, we will have an end of month sale coming up pretty soon, so hold off messaging me for a few days. I'll be posting the sale information in this channel, and then you can go ahead and contact me for the information. Let's go ahead and get into a video starting off with the market data. And as per March, we can see we're up 20.44%. We have a couple days left of a month, and obviously Bitcoin is still not quite over that $30,000 resistance. Looking at the higher time frames, guys, we have seen quite a great move this month. Obviously, start of March, we saw the price around 23,000. We saw quite an aggressive pullback down to around 20,000, and since then we have seen quite a strong rally of around 40%, one of the strongest rallies we have seen for it's been a long time since we've seen a rally like this, guys. It would be over 2 years, a 40% rally in only 4 weeks, but it has been a bloody amazing month for Bitcoin. And if you've been buying those spot bags, if you bought spot where we suggested 16.5k, 19.2k, and 18k, you would be up a considerable amount right now. However, it doesn't change the fact that we are currently at resistance, and we'll be discussing the implications of that today. Moving on, guys, we can see overall that liquidations are down around 30% as less and less volatility enters the market. We are seeing liquidity dry up a little bit, but we are seeing 24-hour volume come up 10%, but overall it is still down for the last couple of days. Under 100 billion at the moment, sitting around 62 billion. It is quite low compared to what we have been seeing this entire month. So we are seeing volume, liquidity, and of course liquidations dry up now at resistance. This is a good indication that momentum is starting to fall. And again, it goes ahead and it tells us, well, you know, this resistance is quite strong, and we are starting to see a weakening price. A weakness in this price at this resistance, which basically exacerbates a fact or strengthens a bear case for a rejection at this current macro resistance. We'll talk about that in a second. Looking at liquidations over the last 24 hours, guys, we can still see there's quite a decent spread between longs and shorts. We are still very much in this chop zone. We are pushing up, pushing down, a lot of stable price action followed by quick and fast moves. If we take a look at the price action over, we can see just within this period here, we have these drawn out periods with not a lot of price action occurring. And then we had these rapid moves upwards to supports and rapid moves downwards back to supports, resistance to supports, followed by more steady price action, followed by strong moves, and then steady price action, strong moves. So we are still seeing a lot of chop occurring in the price, a lot of indecision in the price within this current range between our major supports and resistances, which we'll talk about in a second. But again, it isn't the ideal trading environment for the most part. It is still quite a poor trading environment, as there really isn't too much decision with the price action. The current technicals are suggesting very clear indications, such as dropping momentum, but the price action is taking quite some time to actually respond to that, and we are still seeing that indecision play out within the price action on the smaller time frames. looking at the DXY, guys, we have seen the DXY open. We talked about this yesterday. We said we pushed upwards. We rejected from 103 to 103.5. This is a major resistance zone for the DXY. Anything above this is going to be very bullish. Anything below it, of course, the downtrend will continue. This, of course, is our downtrending trend line right over here. For us to see any sort of continuation upwards, we're going to have to break over that downtrending trend line to see this uptrend initiate. Until then, expect prices to continue down for the DXY. However, I do not think we're going to see the price of the DXY drop below 102 again. I think we could come back to 102, maybe 101.9, find support before a continuation back upwards, but I do not think we're going to push below this 102 as of right now. I think we're going to get a breakout of this downtrend before we see it. The question is, are we going to get a breakout now and we'll see that midline break and that resistance break, or are we going to see a breakout lower down the track which will take us back to retest that midline before a pullback again? That is kind of what we're looking for, and again, that is something we'll have to wait and see what happens. But again, looking at the DXY to predict what's going to happen in the stock market and cryptocurrency is a good indicator. So Dow Jones, we can see bounce off support pushing towards upside again. We are very much in a uptrend right now. We have our uptrending trend line right over here, so a very clear uptrend for the Dow Jones. However, the downtrending resistance has been broken and retested, which is a good sign. For us to see any sort of strong move toward the upside, we do want to see a break of this local high. So, 34467. Okay, moving on to the S&P 500. Again, we did see a little bit of a fake down toward the downside from this rising channel formation. Didn't really hold. We saw this breakdown, strong push upwards, and we're back in this channel again. This channel is a bearish structure, so a short-term breakdown is definitely possible. However, if the DXY continues down, it is very unlikely the S&P 500 will actually continue toward the downside. It is much more likely to continue upwards. Again, not really expecting anything significant for the DXY unless this red resistance breaks. We're looking at 4,100 to break for a swing toward the upside. Until then, we could always still reject, so definitely keep an eye on it. The S&P 500 is still going to be in a decision zone currently for where it's going to go on the macro scale. Let's get into Bitcoin, guys, and discuss a few things. So the short-term price action, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And of course, the macro price action are 2 things we'll be discussing today. And finally, we'll also go over the 4-year cycle, as I did have a question from yesterday's video that I do want to go ahead and go over. So let's start off with the higher time frames and get into the short time frame after. So as you would know, guys, this resistance, this $28,000 to $30,000 resistance, is the yearly macro resistance for Bitcoin. We're going to go over it really quickly for the new viewers. If you've been watching this channel now for a few weeks or a few months or whatever, you would know this resistance has been talked about quite a fair bit. But it is always good to go over it again. So the $28,000 to $30,000 resistance is a significant resistance. Moving downwards, what did we have? We had a bullish trigger sitting at 24,400 to 25,200. 25,200 was the bullish trigger for an uptrend to continue. This uptrend would have taken us to 28 to 30,000. We saw that 280-day resistance break, and we saw the trigger pop off, and we saw the continuation upwards through our low volume range as represented by the VRPV. Very low volume range. We expected increased volatility, increased momentum, and increased speed of price action. As you can see, The moment we break that resistance within a daily candle, we basically pumped all the way upwards through that range to 28k. So incredibly important tool, the VIPV, in predicting how fast prices will actually move between 2 points of support and resistance. You can use that volume range to do so. However, we are currently sitting at the resistance now, and we know that resistance is resistance until it is not. But we also know that this resistance is similar to the 25.2 level, as it represents a higher time frame trigger. This was a monthly trigger, okay, as it lasted over a period of 280 days, okay, below a year. It was a monthly trigger. However, this zone over here is what you call a yearly trigger. It is a yearly resistance. Therefore, 30,000 is actually going to be a 1 year long or a yearly long resistance, okay? A yearly trigger zone, meaning a break above 30,000 will result in a similar scenario that we saw a break above 25.2. Now, it probably will not be as volatile and as quick, but it could lead to an extended uptrend. The reason being, if we take a look at this chart over here, every single time, guys, we see that monthly candle close above the prior bull market low, okay, these are the prior cycles. You can see prior bull market lows represented by these horizontal red lines. Every single time we see a monthly candle close above those levels, we actually end up seeing a continuation upwards. Now, it doesn't necessarily mean the bull market is starting, but what it suggests, it does suggest the bull market is going to be facilitated or at least developed above 30,000 that will eventually enter a bull market. According to the 4-year cycle, guys, the bull market doesn't start until we cross around 17 months after the bear market bottom, this gray zone. We see about 17 bars, 16 bars, 17 bars. So we're looking for the bull market to start anywhere between about March 2024 and April 2024. So again, we do still have quite some amount of time before the bull market will start according to the 4-year cycle, but it doesn't mean that we can't see strong uptrend continuations that will eventually develop into a bull market past this yearly low. If we do quickly take one more look at this, the $30,000 range, if we do close a monthly candle above, we actually never close a monthly candle back below it. Even on the COVID crash, we didn't. So a monthly candle above 30,000 is going to be the strongest point of support or a strongest trigger point for Bitcoin on that higher time frame to suggest a macro continuation upwards. And we'll come back to it in just a bit. Let's take a look, guys, at that Bitcoin chart once more on that higher time frame. So what we are seeing here is, of course, a rejection. We have seen many daily candles now close underneath or at the $28,000 range. As you would know, guys, we are still seeing decreasing momentum, right? We can look at our momentum over here, the RSI. It is suggesting that momentum is falling while price is rising. So we do still very much have this bearish divergence occurring on the higher time frame. And this is suggesting weakness. It is suggesting weakness by the terms of decreasing momentum, which is volatility, speed, and velocity, okay? Volatility, speed, and velocity. If we take a look at strength, so we take idea of strength of price action, okay? We can break strength up into a few different categories. We have momentum, okay? We have volume, we could use liquidity, okay? For the momentum part, we can break that up into speed, okay? We can break it up into velocity, okay? And obviously volume of price action. So speed, velocity, and volume really make up momentum, okay? Now, if we're looking at the strength of the trend, which is obviously the current trend we're in, if we're seeing momentum is starting to fade down because we have decrease in speed, we have decrease in volume, we have decrease in velocity, okay? That generally indicates that our liquidity is also dropping, as these are all interconnected. Now, if these are all dropping, it's reasonable to assume that the overall strength of the trend is also starting to weaken. And that is how we come to the conclusion that the strength of the trend or the current trend is losing strength or / is weakening, okay? I hope that visually demonstrates a little bit more in regards to the thought process behind that, okay? So while we are seeing something like this, it is logical to assume that the current trend is starting to experience weakness or it is weakening. Now, that doesn't always mean that the trend is going to break toward the downside. We can see prolonged weakness occur while the price moves sideways and then resets and continues upwards. However, it doesn't really matter what we think about that, because the fact of the fact still remains. For the price to continue upwards as we are at resistance, the exact trigger is still going to have to break. So regardless of if we say we are seeing weakness, okay, and then the price does this, okay? Or if we say we are seeing strength and then the price does this, what matters is not that. What matters is the monthly close of 30,000, right? What matters is the break over the resistance. And this is where a lot of people get very confused while we're at higher time frame resistances. It is normal for the price to immediately draw out liquidity. It is normal for the price to start pushing sideways. It is normal for the price to get less and less volatile or less sporadic in these moves, or should I say, less velocity, okay, less volume and less speed of the moves at these resistances, as these are massive liquidity zones, guys. Heaps and heaps of orders are in this position. It makes it a lot harder for the price to actually breach and go through that range of our rejections, or at least slowing down a price action. So generally, when you see consolidation underneath resistance, this could actually be seen as a bullish indicator, as the resistance is actually being tested and the price isn't losing the strength that it currently has within the current trend to actually get a rejection. It is kind of holding sideways. However, momentum is a really good indicator to the price action in regards to what could potentially happen next with this resistance zone. So as long as we see momentum falling, guys, we do have to assume the probable scenario is that a rejection from 28 on a higher time frame is going to occur. If we start to see momentum break upwards, okay, particularly from this shift, a momentum shift upwards, and we're still underneath resistance, that is when we now expect the price to actually continue through that range and up to 30,000. So we can use the RSI to define that. There's a whole bunch of different momentum indicators we can use, and you're probably thinking, MegaWhale, why momentum indicators? Well, momentum indicators are leading indicator, guys. They are leading indicators. Price moves primarily, well, one of the main movers of price is momentum. Momentum is a leading indicator. So you see momentum shifting, you can predict where the price is going. On the 1 day MACD, you can see over here, guys, that the MACD is starting to also express weakness. We have day by day, since what, since the 20th of March, now for 7 days or a whole week, momentum is falling. We're having weakening positive momentum. We're positive because we're green, but we're weakening as we have this overall downtrend momentum. And we can see exactly the same thing occurring here on the market side B, weakening positive momentum. If we draw it up to a 3-day chart, we can see that we don't quite have that yet on the 3-day chart. We're still very much positive. We move it down to a 2-day chart, okay? Where's my 2-day chart? I think I just deleted my 2-day chart. Let me go ahead and add the 2-day chart. 1 second, guys. Oh, I don't think I'm gonna be able to because my screen's in the way. But if we go down to, for example, on a smaller time frame, such as like a 12-hour chart, you will see that it's been exacerbated, right? We can see on the 12-hour, we have actually had that crossover. We're already experiencing negative momentum, and in a very small time frame, we're actually weakening negative momentum. So we have this degree of support. Now, if we break it down to an even smaller time frame, you may even see we're having a crossover momentum. We can have a degree of positive momentum showing. But again, guys, we have to look at the higher time frames, we have to look at the smaller time frames and decide which indicator on which time frame is going to be more relevant. And when we're at macro resistances, higher time frame indicators are going to be a little bit more relevant, okay? Moving to a smaller time frame, as we can see, this is the current cheat code. I like to call it the cheat code. This is the current range we are in. This is going to determine the next move for Bitcoin, this particular chart. And if you take anything away from this video, it is draw up this chart on your computer, watch it, and study it, okay? Very important. Anything below this red line here equals a strong downtrend. This is bad. This is when the higher time frame momentum takes over towards the downside. This is when the rejection from 28K really starts to kick off, and this is when the price really heads down and retraces to 26K, 25.2K, okay? We're watching our support. That is our downtrend range. Our downtrend range is between this horizontal support, okay, which is this level over here between 27,100 to 27,300, and our resistance, okay? Above there is a weak uptrend. As you can see, we are in a weak uptrend because we have a short-term uptrend developing, but we have an overall higher time frame downtrend. This is our downtrend, this is our uptrend. So we're not quite in an overall higher time frame uptrend. We're in a short-term uptrend, but we're in a higher time frame downtrend, and thus it is a weak uptrend, okay? And our strong uptrend occurs above the POC, which is this huge chunk of resistance, okay, and volume, and of course, like I said, that downtrending resistance. So anything above, guys, 28,200 is going to trigger a continuation upwards, potentially 29, potentially 30,000. At the moment, we are still in a indecision zone. This zone between this resistance here and this resistance here, this entire range is a indecision zone. The price is very, very on the fence of what it's doing. It's not entirely sure. It's swinging up, it's swinging down. We're in this huge horizontal consolidation with massive, massive wicks toward the upside and downside. Again, all of these wicks here, FOMC, and the government announcing Bitcoin mining is efficient for the energy production or something, okay? These are news events. If we delete these news events, we're technically in a horizontal channel. So watch the channel for the break. A break towards the upside of a channel results in a continuation upwards. A break toward the downside of a channel results in a continuation downwards. If we break toward the upside, guys, we're looking 29,000. We're looking at local highs here, and we're looking at 30,000. If we break toward the downside, guys, we're looking at those prior targets. We're looking at really, really simple targets, such as these local lows, 26,300, okay? Really simple stuff. We're looking at these chunks in the VRPV, okay? Looking at 25,700, again, these will develop. And these gaps in the VRPV, again, 25,200 to 24,400, okay, guys? Keep it simple, do not overcomplicate it. The price action is very sporadic. The price action is very, very indecisive, and I feel like a lot of people are getting bored of this price action. It's wigging a lot of people out because of how indecisive it really is, and it is, again, quite a tricky zone to trade in. But if you get confused, at the price action, the number one best thing you can do right now is to zoom out. Look at the bigger picture, look at this resistance range, understand resistance is resistance until it's not, understand that support is support until it's not. While we're at resistance, we have to assume resistance is going to remain as a resistance until it's not, because more than likely, just going off probability, resistance does remain as a resistance more of the time, and support does remain as support more of the time. Okay, guys, the same principle at the support range. A lot of people were treating this support as insignificant. They were saying 20,000, yeah, support, but who cares? We're going to go to 15,000. Okay, look what happened. It rallied toward the upside. A lot of people were treating this resistance when momentum was falling as insignificant. They were saying we're going to 30K. Look what happened. We came toward the downside. So it doesn't mean it's going to happen again, but what it is telling you that more times than not, it is always better to align yourself with the probabilities and treat these resistances as resistance. Now, you do not have to put action in play yet. You can wait. You can more than happily sit on the sidelines if you're not comfortable and just wait for it to play upwards. Again, it is indecisive. There really is no clear direction. There are indicators suggesting weakness, but again, that weakness hasn't really developed on the price action chart yet, but it will develop depending on what happens with this chart. So we do see that breakdown, expect a continuation. If we do see a breakup, expect a continuation, guys. Until then, we are just scalping. We are just putting lower risk trades in play. Some higher time frame long scalps, some shorter time frame shorts, just really cover all angles. Okay, guys, thanks for watching. I'll see you tomorrow.